So good morning. It's May 4th, the day before non-farm payrolls. This is when we get the Challenger report, and that came out 36.6. The Challenger Christmas in Gray report is important because it's part of the NFP model. So let's get going. Let's do our setups, get ready for tomorrow. Forex today. So welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I am here to earn your loyalty and respect, with the hopes of one day becoming the prime brokerage firm for your successful trading business. Doesn't that sound nice? We'd like to be a part of your success, and so in a way, you could look at these daily webinars as an investment into your future, so that you can become a successful trader. Perhaps this earns the loyalty and respect, and then you choose us to be your broker. How cool is that? Well, we do things right. I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Except for the first Friday of the month, which is tomorrow, May 5th, Cinco de Mayo. Yay, 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 yay! And it's my birthday tomorrow. Uh-huh. Yup, yup, yup. So tomorrow is non-farm payrolls. We will trade that live at fxstreet.com. And I have been doing that webinar. I believe this is now the 11th year. So I'll be over there. And again, I appreciate you. I appreciate the effort that you put into learning. It is true to say that my time with you every day is time that I look forward to. It's some of the, it's the, one of the best times of the day. I can't wait to see what you're up to and to um, share this thing called Forex with you. You're a good thing in my life. Thank you. All right. Here's what MT4 looks like when you pull it out of the box. You ever wonder like who created these templates? Hey Sergey, make some templates. All right, I'll use like a MACD with one line and a histogram. I'll throw down a CCI. I'll do the whole one EMA thing. Huh? Those are some power templates there, huh? All right, let's get to it. So I had in my meditation this morning, uh, something occurred to me, and I guess I need a yen. Do I have a yen here? USD yen wouldn't quite be the right yen. Too much dollar. I don't know. What's your favorite yen pair? Not USD yen. Pick a yen pair, any yen pair. I guess I could just do it here. Aussie yen? Cool. Aight. Aussie yen, which isn't a very good yen pair since Aussie's been weak. But let's do this. So back in, let's say, 1 year from now, 1 year ago, 1 year ago, summer. Let's say last summer. Okay, last summer, whatever that means. July 4th. Great. We talked about, well, how about this? Let's do it like a fill in the blank thing. We talked about the yen pairs going up or down until the end of the year. Last summer, did we talk about the yen pairs going up until the end of the year or down until the end? Peter says up, up, up. Anybody else? Brandon, no. Okay, good. And then last summer, we talked that the yen pairs would go up until the end of the year. And then we talked about the yen pairs continuing going up or starting a steep retracement down. We talked about them continuing to go up, or did we talk about the yen pairs going down? Repatriation, Mikey says. Yen strength. Okay. All right. Good. Until, excuse me. So last summer, we said the yen pairs would go up all the way to the end of the year, and that in the new year they would come down. But but until when? When would the yen pairs that are falling, when would they likely stop falling? And I mean, what did we talk about last summer? They would go up until the end of the year, and then they would come back down until when? Peter, the false rally is more like a February issue. Right. So either you could say the end of March or the beginning of April. It's the same thing, but it has to do with the Japanese new fiscal year, April 1st. Okay. So let's now zoom in. I just want to put things into perspective for the conversation. Right. Somewhere in April, right, you would look for maybe a floor. Right. Is that right? And so the floor has occurred April 19th on this pair. April 19th. So I want to go through an exercise and hopefully we find a spot somewhere in your psyche that will confirm and reaffirm or reaffirm our old conversations, confirm in the now, and then um, remember in the future, recall in the future, okay? So is this the behavior we described last summer? That this thing would go up, come back down, and stop. Is that how you remember it? And not only did we pick direction months and months and months in advance, but it would top out sort of like the middle of December, they would drop in the new year and stop somewhere around April-ish, right? Right? So we're picking direction and time for peak and valley. By the way, here's the false rally, which was also discussed, which is kind of creepy, right? So anyways, so it's not that I'm right. Of course I'm right. That's why I'm here. But it's more like, let's reaffirm that that's all of that went down. And the fact I know it went down last year, but also many years, right? So um, that's this one particular pair. So I want to reaffirm that we had these conversations and that we'll confirm that it's taken place by and large as expected, and that in the future you could recall this into your own analysis, right? Okay. So let me give it one click in. All right. Up until sort of the middle of December, down the new year, and bottom out somewhere in April. It takes a week or two for people to get on the clue train and stuff like that, right? But let's pick the bottom, April 19th. Huh, same day. Pound yen, rally up at the end of the year, top out in the middle of December, drop back down, and zoom in. The actual bottom for the month is April 14th. How about our euro yen? Zoom in, give it a click or two. Okay, rally up at the end of the year, somewhere in December, drop back down. Here's the false rally in February. Again, we talked about the false rally in February back in here. Actually, left of here. We talked about it in here. Then it would go up, down, false rally, and then bottom out around April. The actual low, April 14th, right? Rally up at the end of the year, top out, middle of December. It actually double topped in mid-January, right? Didn't even get a rally because it was so bearish, but I suppose this is the rally, huh? Happened early, then it totally collapsed, fell like a freight train off of a cliff. However, bottomed out the 12th of April. Huh. So, an unbelievable coincidence, right? So, it's again only to reaffirm that there's something at play here, and hopefully you take this with you in the future. Because imagine you had that kind of clarity, you could prepare. See, you're stuck on 15-minute charts, and yet you could be saying to yourself, well, sometime in April, this should bottom out. Okay. Okay. And I don't know exactly when, right? it's more of a strategy, not a tactic, right? It's a plan, but it's not an action per se, right? It's not like you could say, well, April 14th, you should be, but it is something where you could say, once the repatriation flows are over, the the trend can change. Well, Joe, it's seasonality. Can I tell you it's going to be like this every year? No. And of course, then you get caught in the trap of doing things because it's supposed to do something, right? No, but once again, it should be an idea that that there's that there's a logic to this, that there is money moving around the world, that this has to do with various economies doing things. This has to do with commodities being bought and sold and traded. This has to do with business cycles. This has to do with central banking meetings. Why the middle of April, right? Well, maybe that does have something to do with repatriation flows changing, right? But I wouldn't say it's something particular this year, because then you will say things like, like what the people on TV say. Oh, well, it's the French election. No, it's the Dutch election. No, it's Greece. No, it's Ireland and Portugal. No, it's China collapsing. No, it's China recovering. you know, uh, it- it's always this other stuff, which I find really silly, actually. So I look at it like from a Newtonian physics point of view, where it's a giant machine working logically. Now, maybe the participants are irrational, okay, but the market is rational. So Greg says, "Oh, but I said it was going to 100 by the end of the year." I probably said more like it could go to 100 by the end of the year, or I wouldn't be shocked if it went to 100. And it's done it before, but what it does do, and I know we talk about this thing, is that it can get into its price, whatever the price is, whether it's 100 or 110. Okay. And I thought I was talking 110, not 100, but maybe last summer. I don't know. Um, but what can happen with the USD yen is it finds its psych level and then it just floats there for a long time. Like it can be 6 months that it just does something like this in here. Now, is that 110? Is that 100? I don't know, but it's usually a psych level. Now, I thought I was talking 110, not 100, but okay. But here's what we did last summer. And here's an example of it just sitting here from the middle of April, right, to the middle of October is when we retouched it again. But obviously that's election. So the actual sort of normal bottom, because this is the election, clearly. But yeah, see this September 26th, from the middle of April to the middle of September, we hit this area 2 or 3 times, right? And this is what I expect. And I think if we look back, well, I guess we can, right? Here it is again. From um, here's April. From April to September, we were stuck up here. So I'm in the psychological corner, if you will, right now. Whether it's right or wrong, only time will tell, right? But what I feel is going to happen. Remember, there's no logical thing except history. But what I feel is what this pair is likely to do is this. Okay. So we just rallied up from April. Good. Good. Bye. What did I say? Because remember, I bought this gap here, right? What did I say in here? My plan is to take profit, to try to let it run, but to take profit that I don't think it's going to go up to 115 or 125 or something like that, right? It's not going to go up forever. This isn't the big rally of 2017, right? Now, it might be, but I don't think it's the case. Which means I'm opinionated, which is what you're supposed to be as a trader, right? If you're not opinionated, then maybe you're the investor and you need a professional for advice, right? So that's all I'm saying is that okay, this has gone up, but I'm prepared for it to come back down again. Okay. But right now we have some beautiful moves, right? But do you see where we're touching now on this USD yen? Does it look like a good opportunity to buy even though it's an uptrend? No. Right? Where were you? Where were you earlier in the move, right? Here's another thing that we should observe and you need to make decisions on because you shouldn't do something because I said something. But we talked about this week opening overbought and that there's no swing based on pivot points. But you can use price action and moving averages, right? Right? So you can ride this 21, might be a strategy. Stay in it as long as the 5 is above the 8 is another strategy. Tiptoe in on lower time frames is another way. Really got to back out for that, right? Right, the price action, up, 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 higher, high, down, down, buy, up, 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 down, down, all right, up, 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 up. And remember how that's done. You take this old, this old, there's resistance of some sort going on. So when you bust above that, you catch the retracement, and you could use a fib for that. Makes a new higher high, obviously. Drag this across, right? And like this one, it's never quite perfect, but you should be prepared to buy retracements, and that's where Fibonacci comes in. Up, 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 makes another new high, drag this across, right? Up, 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 so on and so forth, and now into the target. So it 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 takes it takes some time though, doesn't it? It's amazing how long it takes, even though it makes tons of sense. It takes a long time to get the skill of watching it rise, right? And waiting for the pullback. Because this is like 8 hours, this pullback, right? Watching it rise, waiting for the pullback. Watching it rise, waiting for the pullback, right? Watching it rise. And then getting out actually takes some skill too, doesn't it? But it's logical, but it's amazing how long it takes to develop that skill, isn't it? I used to be consumed when I first started, anyways. I was consumed with with being in on. Oh, come on, drawing tool. Let's try this again. There we go. I was consumed at one point being in on the up part, right? That it finally broke out, so I'd buy, and then I would try to stay long. But what happens with that strategy of being long on the breakout? How many candles? When is what time frame? Right? There just wasn't a lot of money in it. Right. And then of course the agony of the retracement, which means you either move your stop close or keep your stop far. And both of those are strategies that for me actually didn't seem to work that much. Because if you keep it too close, you always get knocked out. If you keep it too far, when you do retrace and you do get losses, there's so much bigger than your wins that you need like a 90% success rate to break even. Took me a long time to be patient enough to let it run and say, "Oh, look, we broke out. Great. I'll come back 8 hours from now and catch the retracement," right? You guys are probably luckier than me. It took me a long time to realize it's right. It's the pullback that you should be getting in. I don't know. I guess you're luckier, right? Yeah, or 2 days. Rob says waiting's the hardest. Well, one way you can do it is when you observe the breakout, you simply put a working order on the roll reversal. So these red lines might actually be places you put working orders. Then it's not hard at all. Excuse me. Right? Just make sure you're running your auto stop EA or do a parent and child order with it so that if you do get put in, you might automatically have a 50 pip stop, 150 pip limit for trades like that. Yeah, alarms and text messages and stuff. But if you've already made the decision, why do you need to come back, right? So it's all whatever your preferences are. So now, anyways, what a lot of amateurs also miss is when to stop trading, and this to me is a stop trading scenario. So we got jobless claims, Canadian news, some March trade balance. All right, all that's fine. So the biggest thing that we've had right now is Challenger job cuts. Now, the Challenger report has to do with mass layoffs, And the number, the April number is 36,600. Okay. Year over year, there are 43% less mass layoffs. So that points to a pretty high NFP. I mean, it's not suggesting a big drop in non-farm payrolls tomorrow. Shouldn't we stop when we get a reversal? Well, I said stop trading. I didn't say get out. That's going to be your call. I do have one rule for myself, and that's to always get out at the R2. Okay. So if you're hanging on to hit that, that's fine. But it's your judgment call. How strong is the trend? How how likely is it to continue? Are traders going to pile on more trades going into non-farm payrolls? I mean, like, I don't know the answer to that. What do you think? These yen pairs are up. Is it time to take profit and get out of the market, or is there going to be a flood of new money coming in? Well, the market is very overbought. The market's at the projected high for the week, and we have a risk event tomorrow. Is it really an opportunity to pile new money into this? What do you guys think? Does this say, you know, get in? Oh, I got a question here on support and resistance. How much do I do the wicks and lines? You know what? Just try to grab general areas. Don't make a big stink about it. Okay? Give yourself zones. I also look at things like psych levels and such, but don't make a big stink about all of that. Yeah, Sydney, that's what I mean. Before tomorrow. Okay? No, I don't think new money is coming in. I don't. Why? Think about it. Like, what do you see on this chart that tells a professional investor now he needs to like double or triple the volume of his trading? What do you see here that says, okay, now get in? There's nothing that says that. It's overbought. We've hit our targets for the week. We have a massive risk event, the biggest risk event of the month. So now you want to bet the farm? Like, I don't know. No, no. Okay. Right. So, anyways, yeah, I don't think now people are getting excited about getting in, but that's just me. Okay. Euro yen. is at the projected top as well. So right now, Aussie yen is way down. Kiwi yen is way down. Let's like on, guess if you're looking at it this way, look at this. Aussie yen's the same. CAD yen is the same. USD yen is a little bit. Now Euro yen and pound yen and even USD yen are sort of in a supportive zone if you're already a bull. But let's take a look at this, right? Is this really when you want to get involved? So let's look at it on a 15-minute chart. You'll see the moving average holding it up. Okay, you see it? See? So on a 15-minute chart, let's say pivot points didn't exist, I'd be preparing to buy this. Okay, in the next 45 minutes to an hour, this should cycle back up if the 21 acts as support. Okay, if the 21 breaks, then we're dropping to the 55. Right, this is classic FX boot camp stuff from 10 years ago. And this area up here, let me mark it with the gray zone, is where you should take profit. So you'd be buying it, we're at 123.30. Target would be not quite 124. Maybe there's 50 pips on this, but 50 pips is pretty good for a 15-minute chart. But like I said, I don't think these yen pairs are primed to go up and up and up and up and up for a couple of more weeks, right? No, I just haven't seen it historically. So let's move over to some dollar pairs. Here's our Aussie dollar. Lufle. I believe we scalped the short after the NFP. Not NFP, sorry, FOMC. All right, so let's check in on gold. Our target 3 weeks ago was right here. Oh, look, we got it. How nice is that, huh? Took 3 weeks. Congratulations. Now, for anybody that's practicing their double top hammock scenario, that's a double top hammock scenario. Right? You see it? I'm talking about this one, the smaller one. Double top, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then just gone. Any thoughts? You guys are quiet today. Oh, should you buy it here? Or, well, if you're a bull, ask yourself, do you consider this support? Could it bounce here? Or is it going to drop to 12.17? Is it going to rally straight up or is it going to double bottom like it double topped first? Right? I don't know. Oh, oh, well, you have to be a bull and you're going to have to be aggressive, but you know, I suppose you'd be watching it down here, wouldn't you? But isn't it cool? Like, think about it. Think about it. 3 weeks ago, okay, 3 weeks ago, let me zoom back in. 3 weeks ago, we had a target here. That's a long time, man. 3 weeks, right? That's a long time. We had to be patient and let it sit, but we did talk over and over and over again that it never made a higher high. That's cool. So it's done its thing. Now it's time to back off, you know, step away from the table for a little bit and regroup. How about oil? Cool. I'd be careful in here. I'd be careful at 47. It's going to be a buying opportunity for somebody. I don't know if it's enough, but I wouldn't sell here, right? And you tell me, am I a bull or am I a bear on oil? Two people say a bear. Cool. Now, I hope you have that kind of clarity for yourself. No, it's not that there's right or wrong. So any market is going to go up or down, right? Any market's going to go up or down. And now, to trade both sides, your timing has to be impeccable. And generally, people are not impeccable. So it's right because otherwise you're always going to be early or you're always going to be late and that kind of stuff. And if you do that, you're going to take away from your profitability per trade. Okay. So if you only pick one direction for a market, then you can sit and prepare for better entries in that one direction versus very mediocre trades in both directions, right? So if you only pick one direction and your entries are much better, those trades should be much more profitable. And what would that look like at the end of a year of trading? Probably better than, you know, consistent mediocrity, right? So, it, so it's not that I'm right, but you go through a scenario of like, should I sell here? Right? Should I sell here? Should I sell here? Should I sell here? Should I sell here? What should I? And then lower low, right? And now you know when to be aggressive and when to be conservative, right? So if it's making lower lows, right? Here's a drop, no lower low yet. Here's a lower high, right? Here's a lower low, here's a lower high, here's a lower low, here's a lower high, here's a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, right? So all of a sudden, when the market agrees with your bias, and how many times have we said this, right? When the market happens to agree with your bias, you're going to do quite well as a trader. And when the market doesn't agree with your bias, you're not likely to do well, right? But you're also not likely to get a lot of trades, right? You might get some, like maybe take a shot, but on this swing trade, you jam your stop. Do you sell R1s? I don't actually sell R1s, but you could do the counter trend off of here, and that, maybe you made a little bit, maybe you got knocked out of break even. But you wait for the lower low, lower high, 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 lower low, lower high. Like after a while, right? What's the old saying? It's like punching a child in the face and taking their candy. It just feels good. You're a full Forex bully. Yeah, yeah. No, that's an old story, right? About the monkey punching the kid in the face to take his ice cream. All right. So, anyways, a lot of news came out. None of it's important. Jobless claims are actually quite good. 238. The 4-week average is 242. So better than average. Cool. Trade balance. It's only 43 or 44 billion. I guess it's 44 billion. Uh, that's that's not so good. Imports were high. Exports were fairly decent too. See, I'd rather have a bigger trade balance. I want it be like a negative 200 million trillion billion, because that means Americans are rich. Yes, yes, sounds like American Airlines. I guess if you only traded oil or whatever, if you only traded one thing, I guess you'd get pretty good at trading it up and down. But I don't find that that generally works well, at least for me. All right, so Aussie yen, Kiwi yen have hit their bottoms, their double bottoms. So if they're going to double bottom, if they're going to bounce, they're going to bounce now, which means you should probably, instead of trading that bounce, you should probably trade like the pound yen or euro yen, because we know, or the USD yen, because we know that they have a, you may be more bullish. I don't know if you're bullish on the pound or the euro. You might be bullish on the dollar. Okay. But here's the logic. If Aussie yen and Kiwi yen are not going to fall further today, then the ones that are actually good are going to go up. If the most bearish pairs stop falling, then you should look to buy the most bullish pairs. You get it? Cool. FX Ambassador, currently I'm a bear on the Aussie and I'm a bull on the US dollar. So what would you say my bias would be for the Aussie versus the dollar? Because you need to start with that, right? So I could tell you without even looking at the chart. Okay. Now I brought this up for you guys 2 or 3 weeks ago, wasn't it? Maybe it wasn't that long ago. I don't know. But here's some pretty nice, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Isn't it nice? Look at this swing. You're right. Perfect entry, perfect target, perfect entry, perfect target, perfect entry, perfect target. Killer. Yeah. But this is Aussie Swiss franc. Let's move this. Aussie dollar. Way different. Okay. So let's start off with a bias. I'm a bear. Okay. Fine. I knew that this week. I knew that last week. I knew it the week before that, and the week before that, right? I also like to swing trade, which means anyone that's taken my swing trading course knows that I'm selling here, right? That I'm a seller here. Guess I should. Okay. That I'm a seller here. Okay. That I'm a seller here. And I'm a seller here. Cool. Nice. So looking at the weeklies here, we've now hit the actual target for the week. If you sold it on Monday or Tuesday, you're now in the area to take profit. You probably want this to head down a little further so you could catch the WS2 M1. But here's the thing, if you're a bull on this pair, guys, that's the conservative predicted bottom for the month of May. And it's May 4th. If it drops to monthly, right? If it drops to monthly S2, let's put this in English. If it drops to 73.22, it may, right? And may is not certain, but it may head up the rest of the month. Okay. Cool, right? Can you imagine we hit 73 and then the dollar weakens? What would do that? How about a terrible non-farm payrolls that tells the market the Fed may not raise interest rates in the second half of the year, that they're really going to need to be patient and see some better data. Maybe Q1 wasn't transitory. Don't you just love that? But yeah, Michael say, why you say that? What evidence? Well said. Bravo. There is no evidence. It's called a hypothesis. But if you use monthly pivot points, the monthly pivot points would predict that. All right? This is the projected bottom for May. If you use pivot points, it's factual. Okay? It's factual. It may. Now, it doesn't say it will, but don't be shocked if that ends up being the bottom. Because what it means is the market's using monthly pivot points. And if the market's using monthly pivot points, that's what the pivot points are telling you. It's a self-fulfilling prophecy. What evidence? Well, the evidence would be the market buys it because that's a take profit zone for bears and a buy zone for bulls. And you're supposed to buy it in the early part of the month if it occurs in the month, which would be. So it's just like, I don't know, it's just that's what they're there for. There is no evidence, but if it happens, go back and it's probably because of those pivot points. So will it happen? I don't know. Does it have to happen? Certainly not. But it totally could. And therefore, one of your jobs as an analyst is to say, my analysis tells me that this could be a turning point in the market in which the Aussie versus the US dollar becomes oversold. And you simply be prepared to observe a reversal and maybe trade it. All right. So, like the double bottom I just called on the Aussie yen and Kiwi yen. If that holds, then something happens, right? We don't know if it's going to hold, but it could. It might. So just for fun, I guess we'll look at Aussie yen. Okay. So it's a hypothesis. If it does, then I will behave in a certain way. Okay. So what I was looking at was, I guess I got to even go smaller time frame. This, okay? If that holds, remember it was all red when I called it, right? It was all red. Here it is. If it's going to bounce, it's got to bounce now. Okay, so it did bounce. Cool. Well, that would be a hypothesis, right? Was this tradable as a scalper? Remember, as it's fallen, you say, well, this area could create some bullishness. What? Maybe you prefer a more classic setup. Okay. What's the entry? Classic boot camp style. Remember, you already know you want to buy it if you're a scalper because you're setting it up for the buy it at support idea. So what's the classic trigger? Old FX bootcamp style, if you knew me from 10 years ago. Or if you read my book or something. 5A cross, thank you. Whoop, 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 whoop. Yeah, not bullish engulfing candles and stuff, no. Cool, right? That's old school, man. That's simply having a trade plan and dropping into the 1 minute to trade it. If it double bottoms, then it'll go up. Do you think this has anything to do with the weekly central pivot? Yeah. Well, that would be part of the trade, right? You're like, man, I think this could bounce at the monthly central pivot. So you wait at the monthly central pivot to trade it. Now check that out. Is it plausible to say, well, somewhere around the monthly central, weekly central, this may head back up, or that it's 90? What is this? 94% oversold. Would it attract? Would it attract more bears? Think about it this way. Would it attract more bears when it's already 94% oversold and we're at a right and we're at a cluster of weekly central pivot, monthly central pivot? Would that attract more bears to sell there? Is that what bears are looking for? They're like, man, as soon as it gets down to here, I want to sell. And I'm going to totally wait for it to be 94% oversold. Then I'm going to sell. Yeah, well, you wouldn't look at daily per se for a skippity scuppity, right? This is different, right? We're just talking about a shorter term trade, right? So if it makes no sense to sell there, well, maybe there's an opportunity. That's all. Okay. Okay. And that's why it's a scalp. But yeah, it's totally bearish. Right. It's totally bearish. Okay. Ask yourself, right? Because you're training yourself. I'm trying to train you, but you need to train yourself as well. Did the pivot points hold the bottom for the week? Yes. Did the pivot points hold the bottom for the week? Yes. Did the pivot points hold the top for the week? Like we hit it 2 or 3 times and it dropped, and then when the new week started, it went up. And then what? Hit the target and held it down. Even if it wants to head up here, let's say it does, it it's held down every single week by the pivot points, right? Isn't that neat? Okay. Do you again, this is like training questions, so obviously they're um, they're obvious questions, but was there a trade opportunity in here? Was it predictable or is it random? Well, we know it's a double top, but that didn't occur until like let's say Wednesday. Was it predictable on Monday or Tuesday or Wednesday morning? Would it be something that where you would say, "Hey man, I wonder if a double top's going to form here." See, isn't that what Hello, hello, hello. Oh, yeah. I apologize for that. So, anyways, yeah, so don't need to beat a dead horse, but you need to have a plan. You need to be thinking ahead, not behind. If you hit your predicted top, you either take profit or you look to take it back down because of the profit taking, right? But most importantly, you're thinking ahead, and that's really what matters over and over and over again. Thinking ahead about your bias, thinking about your head about the technicals. But being ahead of the curve is always going to be better than being behind the curve. So I'll see you tomorrow, guys. I'll be at FX Street for Trade Non-Farm Payrolls Live. Yeah. And if anyone wants to take the swing trading course at a discount, you need to contact the support desk at TradersWay.com. And if you have a live account funded with money, you receive a 50% discount. Tucker says, yeah, you did that work like a charm. Yeah. The funny thing is, honestly, um, well, whatever. Yeah, so it works. So if you have a live account at TradersWay with real money in it, any amount doesn't matter. You can just ask them for a coupon code. So you save like what was it, Tucker? $500, 501 or something. Yeah. So thank you for being a client, Tucker. I appreciate you. I like the way you trade. Yeah, cool. So I'll see Wow, it's a problem today, huh? Yeah, the webinar just went down again. What are you going to do, eh? Actually, thinking about it, there might be a minimum on it, right? You have to have $500 in your account. If you have at least $500 in your account, you get $500 discount, something like that. So, anyways, I hope it helps. I'll see you tomorrow, fxstreet.com. Thank you for being a client. Thank you for your patience with me and technology today, and can't wait to see you tomorrow, and then again on Monday, and then on Tuesday and Wednesday, and then Thursday and Friday. It's going to be awesome. Peace on earth. May the pips be with you. May your profits be above average.